Hi, welcome to our channel. My name is Ina.
And my name is Rexon.
We run an online business and we're real estate investors.
Yeah, so currently we have four properties here in Canada and a total of six rental units, right? And today we're gonna be sharing to you guys, in this video, we're gonna be sharing to you how we bought our first home here in Canada.
Yeah, so this is back in 2019. So we're also gonna be sharing some tips and yeah, what we learned on the process.
Yeah, because as first generation immigrants, we arrived here in 2016. A quick backstory, right? So, to give you an idea, where we actually started. So, when we arrived here in Canada way back 2016, we are deeply in debt, like a lot of new immigrants do. I'm sure a lot of you guys
Immigrants
are able
can
to
relate,
relate
yeah.
that when we came here, we were in debt because there's a lot of expenses that we incurred coming here in Canada. So but when we arrived here, our one of the goals that
Main
we have,
goals, yeah,
the dream that we had before is to
is to own our home. What we did is we set a timeline.
Yep. It's like having a dream, and then when you set a timeline to your dream, that becomes a goal, right?
Yes.
So we set a goal to own our first home here in Canada. So setting a goal means like we need to save up for a down
Yeah.
payment.
So what we did is we set a timeline and we reverse engineer because of course we have to pay off our debts first and to save up for the down payment and for the like moving expenses, like the closing fees and all. So um so that's what we did at first. And next is
Well, I guess we're gonna have another video about all the things that they need to learn first in buying a house. What are the fees that you're gonna have? So you'll be able to include that in your budget in buying a house, not
yes,
only for the down payment, because there's gonna be a lot
closing
more
fees.
expenses that you're gonna have. So we're gonna have a separate video about that. About all those things. So that's gonna be interesting. It's gonna be more in depth. So
Yes.
again, the first step is set a
Set a
timeline.
timeline.
Yep.
The next would be you can either increase your income or lower down your expenses, or you can do both. So in our case, what we did was we lowered down our expenses. So how we did that? So we were being frugal. We rarely eat out. And what I did is I downloaded an application in my phone. So here every Thursday there's a new flyer, so I can see the in that app I can see the
Which items
yeah,
are on
which
sale?
items are on sale. So those that we regularly use at home, so I buy them
In bulk.
yeah, in bulk when they go on sale. So
Especially rice. For Filipinos
Filipinos.
and Asians, rice is life. Of course, other stuff like I don't know, canned goods at some point.
Laundry soap or anything that we regularly use at home.
Yeah, so anything that's on sale. And usually, I remember like a few years back that our menu is basically based on what's on sale.
The vegetables that are on sale, because they go bad fast.
So yeah, so
So
basically, you just need to be frugal and look for items that you'll be able to save use applications like flyer applications, anywhere, the one that you'll find in the newspapers or in your phone applications like Ribi here in Canada. Anything. You might be thinking that those are only small items or
Yes.
small amounts that you'll be able to save, but those small amounts will go a long way, right?
Yes.
So, be frugal and, try to reduce expenses, and at the same time, try to look for ways that you'll be able to increase your income.
Yeah.
Maybe, do some side hustles.
Yeah. You'll be amazed um how the power of compounding, would make a huge difference.
Yeah. And track your expenses. So I'm not tracking the expenses. She is tracking the expenses. So, you gotta tighten up your belt, right? So make sure that, everything is on the list, and then you stick to a particular budget only.
Yes.
Tip number three.
Yes, you can actually do house hacking. We're gonna be creating a separate video for just for the house hacking. So, what does it mean?
Yeah. House hacking, this is one of the terms that we actually learn
Yes.
when we're listening to real estate investing videos. So, to share it to you, for the people who don't know what house hacking is, house hacking means that you're gonna buy a property, you're gonna live on it, and at the same time, you're gonna rent part of that property. It's
Yeah.
like buying a duplex.
Mm-hmm.
So you live on one unit, and the other unit you'll have it rented to someone else, so that you'll have someone that will be able to share the
The
mortgage
mortgage,
payment on your
yes.
house, probably half of it, probably the whole amount of it.
Yeah.
So it depends on how expensive the property is, or what's the cost and what are the expenses that's incurred in that particular property. But at least someone is helping you
Mhm.
pay off that particular property. So that's called house hacking.
Yes. So when we bought our first property, we didn't know about this. So
And that's the easiest way too. Instead of, because buying a house here in Canada, if it's a house that you're gonna be living in, you're only required to put in 5%
mm-hmm.
down payment. If it's an investment property, second property that you're gonna have, you're gonna be required to put in 20%
20%.
down payment, and that's gonna be very expensive, right? So, house hacking will be able to answer that, because basically you're buying one property, but it's a duplex. So
Mm-hmm.
you live on one unit, and at the same time you have an investment property that you paid only 5% down payment,
Yeah.
right?
Yeah.
So,
We'll talk about that on our house hacking videos.
tip number 4. Build your credit history.
So building your credit history, it's very important because the banks or the mortgage lender would check that out. So what we did is we make sure that we pay off our credit cards. Actually, before the due date, we clear our credit cards. We only use our credit cards for the points, and also to build our credit history.
Yeah. So basically, we know a lot of folks are sticking to cash only, or probably debit card only,
Mhm.
because they don't want to use their credit card, to stay away from getting in debt, right? That's
Mhm.
a very smart idea. But the thing is, here in Canada or in the US or probably anywhere else, um, banks and lenders are going to be looking into credit history,
Yes.
right? They're going to be looking into your credit score. The thing is, if you use cash or you use your debit card straight, then you don't build a credit score or a credit history.
Mhm.
Then the time that you wanted to go to the bank and ask for a loan to buy a house, then they're gonna be a little bit hesitant because they don't know your history, right?
Yeah.
You don't know if you're gonna be paying on time, if you're good in paying your debt. Um, so that's it. Again, we're gonna have a separate video about that, about what are the requirements that the banks are or the lenders are gonna be looking into, because there are also different kind of lenders that you can go into. So you have the A lenders, which
Yeah.
are
The
basically
big
the big
financial
banks, yeah,
institutions, big banks.
like RBC, Bank, all those big banks. At the same time, you have what we call the B lenders.
Yes.
Those are private lenders. If option A is not available for you, then you can go to um,
Option B.
option B, the B lenders. It's just that probably you're gonna be paying a little bit of higher interest rate
Yes.
with those lenders.
Yes.
Okay, and what we did is, in connection to what Ina mentioned about using points, it's really cool if you use your credit card, mainly because you'll also be able to rack up points every time you use your credit card. And we're since we're trying to be frugal, and we wanted to increase our income at the same time, right? So we're using credit cards to rack up points and get free stuff, cashbacks and free stuff
yeah.
from all the purchases that we have. So this is a good one. So we mainly use RBC as our credit card.
That's our main bank, RBC. But
Yeah.
we use Tangerine.
Yeah.
For our expenses. We use the Tangerine credit card.
And it's really cool because you'll be able to get more points from Tangerine, right? Cashback. So basically, they can offer up to 2% cashback on select categories, right? For example, groceries, for example, home improvements and stuff.
Signing bonus of $50. Of course, there are requirements that it's very easy to do. So yeah, if you want to check that out, you can use our link down below.
You'll be able to see our Tangerine link, so you'll be able to sign up and try Tangerine. So probably you'll be able to get some bonus, and you can enjoy the cashback, not points, but cashback, direct cashback. Tip number 5.
So you can actually take advantage of the RRSP, First Time Home Buyers Program. But be very careful, because you have to put back the amount that you withdraw from your RRSP within 15
years.
Yeah, in 15 years. So yeah, we will also make a separate video for that, because it's a whole new topic.
Yeah. So probably you heard already about the RRSP's first time home buyer program, but we're gonna be discussing that in detail with regard to our case as well. So there are probably more numbers that we're gonna be discussing on that one. It's gonna be very interesting, maybe a little bit boring, but very helpful if you wanted to buy your first house. So watch out for that video.
If you wanna save on your tax.
For sure, if you wanted to save on your tax, this one is the way to go.
Yes. Last tip is don't stretch your budget too thin. So, for example, if you are pre-approved by the bank for 500K house or home, don't I would suggest not to get a house with that price. So you can go a little bit lower, because what the banks do is they already analyze your debt to income ratio. So if you go with with a maximum that the banks can loan you, then you wouldn't have any wiggle room, so
as much as possible, shop for properties that are lower than your pre-approved amount. So if you have 500k 500,000 pre-approved amount, then try looking for probably 300, 400 properties. That's something that you'll be able to um, afford. And a lot of you probably are thinking that maybe it's not the right time to buy a house because the interest rate is so high, and the houses the price of the houses are still high at the same time. So we would say that if you get the opportunity, buy your property, because if you're buying to live in that house, it's not an investment property, then you should go for it, because the stars are not gonna be aligned. You don't wait for that exact moment, right?
Yeah.
So you don't wait for the prices to go down, for the interest rate to go down, probably for your situation to improve. Like probably you'll get higher income, maybe you get a raise from your job. The thing is, probably it's not gonna happen, right? So it's just like driving a car. When you drive a car, you don't wait for all the stoplights to go green before you go, right? So you start, and when it's green, go. When it's stop, then you have to stop, right? So the thing is, you have to start. If you're living in your property for your family, to build memories, then buying a house would be a good idea, as long as it's within your budget, and don't spread your selves too thin, your budget's too thin on this one.
Yeah, you have to understand that buying your primary residence is not an asset. It's a liability. So we always hear that your your house is your biggest asset, but in reality, it's not. Yes, that will be an asset if you will sell it, but if you're planning to live in it with your family, build memories, so it's not gonna put money in your pocket. It's a liability. We are spending for a house, like for maintenance, for renovations,
A lot of
for
upkeeps, right?
yeah, for
Anything
taxes.
for the house, all the upkeeps, all the expenses that you have on the house. You just need to draw the line if it's an asset versus a liability. An asset puts money in your pocket, and liability, you're spending.
Yes.
So every time that you live in a house, you're just spending. You don't earn anything from the
Right.
house, right? You're just spending out. So basically, it's a liability, though for us it's an asset because it's where our family lives. But in reality, our house is a big liability, right? But we're not saying that you don't buy your house.
Yeah.
It's just that you need to understand between an asset and a liability.
So yeah, Roxanne, as what Roxanne said, you don't wait for the market to be in your favor, or for the interest rate to go down, because nobody knows when will that happen, or nobody knows if the interest rates will go even higher, or it will lower down. So the thing that you can control is your budget. If that makes sense for you and for your family, and if you can afford it, then go.
We've mentioned earlier, we're gonna be making more videos about buying your first home here in Canada, and later on we're gonna be doing a lot more videos about our real estate investing. We're gonna be sharing our experiences. We're gonna be doing videos about house renovation. We recently bought a house, and we're currently doing renovations on it. So we're doing a whole house renovation. So maybe you can stay tuned later on in the videos to see how we did renovation in our kitchen, in our living room, our bathroom, and those things. Anyway, thank you so much for watching, and please like and subscribe if you find this video helpful, and please watch out for our next videos. Talk to you soon. Bye.
Bye.